Hey everyone, it's me Latoya from over at the Profit Room. I am going to go through Twitter. Twitter now, whose favorite social media platform is that? Take a wild guess. Generally the tweets kind of rock the boat and stir the markets. So let's get into Twitter. This alert was sent out Sunday, September 1st. And this past Sunday, today being Thursday. And this is the day where Twitter ran wild. We prefer options in this trade. And we had an entry point of 42.80, stop at 41. We gave it room and target 45.40 to 46. Let's dive into the charts. Now, this is a completely naked chart. There's absolutely no levels on here. I'm just going to box price action from where we can see it. This is an area of consolidation where price traded within this particular range from July up until about their earnings. This is an earnings gap, and it pushed above the range, which is fine. Now, leading up to the point where the team decided to provide this as a long alert. Why? It's real simple. It has to deal with, okay, current trend. That's it. What's the trend? We're in the uptrend. We were in an area of another range, and we broke out. So our entry point happened to be right in here. This move alone yielded about 160% return from the preferred options rather than the actual shares. Let's get into the option chain. So one may think, why bother to learn technicals? Well, technicals give you the ability to pay yourself as often as you want. You don't have to sit in stocks and trades and just wait and wait for maybe extra income in a form of dividend, or just wait for a decent return, generally 20-30%. It really depends year to year. Now with trading, you're great on your technicals, you can really nail trades. So this trade in particular went 2 weeks out in terms of the expiration, 43 calls. Our alert was 42.80 stop price. So you could either bought at the money, basically, and these are the options. So let's pull up that option chart. To see exactly how it performed. Here it goes. 2 days. I'm going to actually break it down to let's just do a 1 hour time frame. So right around here, 80s to 90s, that's when our alert hit in terms of the shares being at $42.80. And this is where the current price of the option was traded. So from here to here, that's an awesome return. So simple math here. To find the difference, you'll take 252. You'll subtract 0.88 and you divide it by 0.88 to get the difference. You get basically 186% return on investment. Being a technical trader, I am able to take action, make a decision much quicker than the time that I actually spent reading a company's earnings report, diving into their income statement, looking at that balance sheet. All of that stuff reminds me of what I used to do prior. I used to put together 10Ks. I used to put together annual and semi-annual reports. I used to do a lot of that stuff. But one thing for sure, it takes a special kind of skill and knowledge in order to, I guess, trade, really, learn technical analysis. Because all my peers or co-workers at the time, they would not know how to dissect this chart. They would not know how to trade. There's a vast difference. And I think that's where there's a disconnect in terms of the industry. We do have a lot of analysts. They know the companies, they know the books, but they can't pinpoint an exact area where to buy that stock on a chart. And that's where averaging and all of that stuff comes into play. Because once again, you have to develop the skills in order to read the actual chart. All right, so Twitter. Let's go to a 1 minute chart because 45.40 is the targeted price. And it's going to be up in the morning, so we'll probably wake up to a slight gap up, as in hitting our target nearing 46 as well, and that's the range provided. Let's do one more that was on that alert on Sunday, which was WDC. WDC was awesome, basically 2 days to hit target. This was our entry point, 57.84, right around there. It's probably a little bit earlier, 57.70. We want to take it to 61, trail to 62.50, 62.70. If it stays intact, we'll take it even higher, 64.60. So this is the third 57.70 trigger point. Next day, we all woke up to a nice gap up, hitting first target. And then today, we're reaching that 62 area. So nice trend so far. And same as prior example of Twitter, just an uptrend. Hey everyone, I am back. So this is part 2. I'm gonna merge this video because it is another day, Friday, and Twitter has reached the target of 45.40. We have a range of up until $46. Currently, as price is trading, the actual stock price is at $45.62. You're looking at the options here. Right now, higher 279 from 88-cent fill. You're looking at a 217% return. What an amazing trade. This is on a 1 hour chart. Let's get that daily perspective. There you go. Nice trend higher. And let's actually look at the underlying stock itself, Twitter. So here goes Twitter coming across out of that range. And it is en route to the next targeted area levels. So we went through a very simple process. I kept it as basic as possible because over at the Profit Room, we do not complicate anything. It's literally what is the current trend. And if you can answer that one question, Now is a matter of exactly how to enter. Once you have developed as a trader or even an investor, you have to have different types of accounts. Just like some people have different types of investments. For example, our day trading account is a day trading account in itself, is separate from any swing trading or option trading position we may take. We also have legacy accounts. Legacy accounts, that's more so for retirement. So one thing I like to do, I like to take whatever I make, I call it my intermediate account. It's the middle account. This is where I hold my futures position. I'm usually hold future trades for a few days, maybe a week, depending on the same concept, that initial trend. So I'm looking for a larger targets. Same thing with swing trading, stocks and options. So a 200% return, that's awesome. What I'm going to do is take that income or the gains and transfer it into my legacy account. So instead of my legacy account now waiting on quarterly dividend payouts, it will always get funded with great, amazing gains, just being able to look at charts and use them to your advantage to project movement much faster than waiting 3 months for a payout. While we know that stocks fluctuate on a day-to-day basis. It's just my logic, and I found that it works and it outperforms. And one true saying they always say, once you know better, you do better. Just a quick shift in gears just to see how the members performed and where they took their profits, etc. We did prefer options, so a lot of the members took the options component of the Twitter trade rather than buying the actual stock. And a member actually got back in yesterday after taking initial profit, and they're up 20% as I currently speak. So also let's review TMUS, because TMUS, we are in long and we have a target of $80 at 80.40, and hopefully we can continue with that trend to hit a higher target. Once again, WDC already hit target, so trailing that, of course, and then Twitter is pretty much done. This is where the options were preferred due to the stop we gave. So here you go with Twitter. So the reason for options, so let's just do some simple math. For our alert, let's just round it up to $43, although we got it at $42.80. So $43. Actually, let's just do that math. So let's just call this $42.80 to about almost $3 a share, right? Almost a $3 per share movement. 100 shares, $300, and 1,000 shares, $3,000. But with options, you do not need a lot of capital just to buy the actual options. And options is a personal preference. In a sense, you'll notice when we do say option prefer, we do not give particular strike prices, because some people might want a little comfort and go in the money or at the money, and some people are cheap like myself, want to go out of the money. Like if you're technically correct and you don't want to spend a lot of money on options, you already know the direction of the chart and you can kind of time how fast it's going to get there, you can take that added risk to buy options further away from the actual price. And the expiration is totally personal as well. So that's a preference as well. I like these options the best, and that's why I went with the 43. And once again, personal preference. And you can see the profits, they varied within the chat, and that's because, once again, options is a personal thing. So everyone took different options. So at this price, let's just round it up. You bought options at $1. $1 times 100, because each option is equivalent to having 100 shares. So one contract, you have to multiply it by 100. So you would have spent $100 for one contract. If you got a total of 10 contracts, that's $1,000. And today's full movement, meaning holding for about 3 days to the end of the week, Friday, hey, payday, that's basically a 200% return on your money. Hopefully you enjoyed this video. Kept it very basic about uptrends, downtrends, and channels. And also, let's just go to TMUS so you can see exactly same logic, same logical uptrend. And this is literally, that's it. All right, everyone. Have any questions, always feel free to email us. You can email me personally, latoya@theprofitroom.com, or admin@theprofitroom.com, and our admin will respond. All right, everyone, take care, trade safe. Let's rinse and repeat over and over and over again.